Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
Imagine being told your entire life that governments hold the ultimate power. They create laws. They manage economies. They control national resources. They run the country. But what if that's only the story we're allowed to believe? What if the real power, the deeper power, belongs to a group that never appears on ballots, never attends political rallies, and never asks for your vote? What if the institutions with the biggest influence over your country aren't the governments at all, but the private banks lending money to them? Because here's a question most people never ask. If governments borrow money, who do they borrow it from? And who profits when nations drown in debt? The answer leads to a truth so uncomfortable that countries avoid talking about it publicly. A truth that reveals private banks own far more of the world, more land, more wealth, more influence than any government realizes or is willing to admit. To understand how this happened, and how it affects every part of your life today, we have to peel back centuries of history. We have to go back to a world before digital money, before central banks, before the concept of national debt even existed. Because the system we live in today wasn't built overnight. It evolved, piece by piece, through crises, wars, collapses, and strategic moves made by people who understood one simple principle. If you control debt, you control everything. But this story doesn't start with power. It starts with fear, specifically the fear of losing wealth. In ancient times, merchants carried gold, silver, jewels, real assets. But carrying real wealth was dangerous. Bandits, pirates, and armies knew where the value was, so merchants needed a safer way to move money across long distances. That's when the earliest banks emerged, not as financial institutions, but as storage facilities. Goldsmiths, temples, treasuries offered protection for a small fee. But then came the first twist. People started receiving paper receipts showing how much gold they stored. These receipts became easier to trade than the actual gold, and gradually, the receipts themselves began to function as money. The gold stayed locked away, untouched. The paper began circulating. And the people holding the paper trusted the system enough to stop checking what was in the vault. This created an opportunity, a loophole so powerful that every major financial institution in history would eventually exploit it. The vault keepers realized that not everyone would come back to claim their gold at the same time. So they started issuing more receipts than the amount of gold they actually had. They lent these extra receipts and charged interest on them. With a single decision, banks discovered how to create money out of thin air. And the most important part, governments didn't create this system. Private individuals did. This marked the beginning of a dynamic that still controls world economies today. Governments do not control banks. Banks control governments because governments need banks' money to function. Fast forward several centuries. Monarchs across Europe were fighting endless wars. Wars required soldiers, gunpowder, food, logistics, ships, and endless supplies. But kings rarely had enough gold to fund these wars. So they turned to private bankers' families with enough wealth to lend not thousands, not millions, but entire national budgets. This wasn't pocket money. These were loans that determined the outcomes of wars, loans that shaped borders, loans that decided who would rule and who would fall. It was during this time that a new class quietly rose to power, the banking dynasties. They were not kings, they were not nobles, they held no political titles, but they held something far more valuable: leverage. Once governments became dependent on their money, these private banks began influencing policies, alliances, and decisions behind the scenes. They could support a war or pull the financial plug on it. They could empower a ruler or destabilize them with a single letter announcing loan withdrawal. Governments realized something dangerous. The power they believed they had was borrowed. This tension between elected authority and private financial power set the stage for the world we live in now. But the next major milestone came in the 17th century, when a government on the brink of collapse made a decision that would permanently intertwine public governance with private banking. England was drowning in war debt. Desperate for funds, the government agreed to a proposal from private lenders, the creation of the Bank of England in 1694. But here is what most people don't know. The Bank of England wasn't originally a government institution. It was a private company. A private company that had the legal right to create money and lend it to the government with interest. In other words, the nation's money supply became dependent on private banks. This model spread globally. France adopted it. America later adopted it. Nearly every developed country adopted it. Private banking institutions gained the ability to lend money to governments and charge interest on that money. This meant the amount of interest a country owed could grow larger than the amount it borrowed. And the governments, they couldn't do anything except borrow more to keep the machine running. The story escalates in the early 20th century with the creation of the Federal Reserve. In the United States, many believe the Fed is a government agency. It's not. It's an independent entity composed of regional private banks. The US government does not fully own it, does not fully control it, and cannot fully audit it. Yet the Fed controls the US money supply. It controls interest rates. It controls liquidity. And it can lend money to the government using dollars it creates from nothing. This system private banks empowered by the state creates a powerful irony. Governments appear to be in charge, but behind closed doors. They rely on private institutions to keep economies alive. They need banks to issue bonds. They need banks to fund deficits. They need banks to stabilize markets. And during every economic crisis, governments rely on private bankers to coordinate bailouts, emergency lending, liquidity programs, and rescue packages. And this dependence doesn't come cheap, because every loan comes with a cost, and over centuries. Those costs added up so significantly that banks, private institutions with no election cycle became wealthier than entire nations. By the late 20th century, private banks owned massive shares of national debt across the world. They owned government buildings through repossession. They owned land. They owned corporations. They owned stock markets. They influenced legislation. They shaped trade deals. They guided spending priorities. So how did the world shift from governments owning banks to banks owning governments? The answer lies in four major events. First, the abolition of the gold standard. Once currencies were no longer tied to physical reserves, governments could borrow unlimited amounts. And who did they borrow from? Private banks. Second, the rise of credit markets. Corporations and governments needed financing to expand. Banks became the gatekeepers of economic growth. Without loans, development stops, infrastructure stops, salaries stop, and no politician wants that. Third, the explosion of global bond markets. Government bonds, the IOUs of nations, became the world's most traded financial asset. Private banks became the biggest buyers and sellers of these bonds. This gave them the power to dictate interest rates by simply choosing how much debt to purchase. Fourth, financial deregulation. In the name of economic efficiency, banks were given more freedom to invest, to speculate, to merge, to become bigger and more influential. These deregulations created financial giants so powerful that governments fear regulating them too strongly, because a bank collapse could destroy the entire national economy. And so we arrived at a new global reality. Governments must negotiate with banks. But banks never have to negotiate with governments. But here's the question you're probably thinking. If banks own so much, what exactly do they own? More than you think. Private banks own a significant portion of government bonds. That means they own future tax revenue. Every citizen's labor becomes part of the bank's long-term assets. Banks own mortgages, which means they effectively own millions of homes until the last payment is made. Banks own land portfolios reclaimed from defaults. They own major stakes in large corporations, which gives them voting rights in boardrooms. They own stocks, funds, sectors, and industries, and their influence extends far beyond the financial world. This ownership gives them a form of quiet political power. They don't pass laws, but they influence the people who do. They don't draft regulations, but they advise the institutions that enforce them. They don't run governments, but governments rely on them to operate. Then came the 2008 crisis, a breaking point. The world witnessed something shocking. Private banks had become so large, so interconnected, and so essential that governments could not allow them to fail. They were labeled too big to fail, meaning the government had to save them or risk total economic collapse. But to save them, governments had to borrow more money from the same financial system that had helped create the crisis. Think about that for a moment. When private banks made risky decisions and collapsed, governments used taxpayer money to rescue them. And to raise that money, governments borrowed from those same banks. Banks were paid for their own rescue. This wasn't a bailout. This was a demonstration of hierarchy. The fallout of that crisis changed everything. Banks emerged stronger. Regulations were rewritten, but loopholes remained. Wealth inequality accelerated. Asset prices inflated. Middle-class savings were wiped out while banking profits hit new highs. Governments became even more indebted, and as debt increased, so did the influence of the institutions that held it. And yet, the fixes failed. Because the fixes never addressed the core problem. Governments are structurally dependent on private banks, so every solution involved more debt, more borrowing, more reliance on private institutions. The system patched its cracks, but never corrected its foundation. Which leads us to the modern world, a world where private banks effectively own more influence, assets, and leverage than governments acknowledge. A world where national policies are shaped by bond markets. A world where financial institutions can cause a crisis one decade and lead the recovery the next. A world where governments operate like clients and banks operate like suppliers. You can see this pattern everywhere. Countries with high debt are forced to follow the recommendations of banks and financial advisors. Nations with failing currencies must accept terms from private lenders. Politicians depend on financial institutions for campaign donations, for economic credibility, for market stability. And when a country tries to break free from this system, when it tries to nationalize banking, regulate capital, or restructure debt, it faces immediate retaliation from credit rating agencies, financial markets, and global lenders, which raises a troubling reality. Who really governs modern nations? Their elected officials, or the institutions deciding how much money those officials can access? 3 takeaways emerge from everything we've uncovered. First, private banks have become more powerful than governments because governments rely on them to function. Political authority means little when financial dependence dictates every major decision. Second, debt is the mechanism through which this influence is maintained. Nations borrow, banks lend, interest grows, ownership expands, the cycle repeats, until the lenders quietly become the true owners. Third, the world will eventually face a reckoning. A system built on endless borrowing cannot last forever. And when the next crisis hits, not if, but when governments will either reclaim control or lose the little control they have left. So here is the question you need to ask yourself. If private banks own more than governments realize, who owns your future? Who owns your labor, your home, your currency, your nation's decisions? And most importantly, who benefits from keeping you in the dark about it? If you want more deep dive breakdowns into hidden financial systems, power structures, and global influence, subscribe to the channel, turn on notifications, and share this video with someone who still thinks governments are the ultimate authority. Because once you understand who really holds the power, the world looks very different, and we're just getting started.